Hello and welcome. Today is Sunday. It is the 16th day of March, 2014. My name is Derek and I welcome you to today's video. Yesterday, on Saturday, I put up two videos, one for gold, one for silver. So if you have not seen them, they are available on the channel for your viewing pleasure. And today's video will contain three different commodities that you can see on the bottom of the screen: coffee, cocoa, and natural gas. And within the last week, pretty much two, I've been looking at some of the FinViz weekly charts within the commodities sectors, and I've noticed that many are showing signs of starting uptrends. Practically all of them have been in bear markets within this early decade. And I'm seeing a decent amount of nice upswings. Maybe this is indicating a mid to long-term reversal within the commodities sector. But I find it interesting because you look at inflation, and inflation really is increase of the currency supply. And for my calculated, educated guesses, it's been 9, 10, 11, 12, some even say 14% a year. Quite high, and they have no choice when you look at the math, the whole math that's within the system of borrowing, lending, and creating these fiat paper rectangles and digital numbers. Then you have price inflation, which generally is a lagging function of the two. And you hear the number, 2%-ish or something like that? When you look at the food, the energy cost, that's very debatable. We're going to take a look at two food items in coffee and cocoa, and then an energy item in natural gas. Now, I'm going to be mainly talking about technical analysis and the key things to look for, and these are interesting charts that I think that are worth note. Now, a couple of them I'm going to be talking about plays, and it's if you decide to do them, if you win, you win, you lose, you lose. I'm not playing them, but I will explain them within the videos, one's for coffee, one's for natural gas. So let's get started. Let's look at the 2-week chart for coffee. Each one of these periods represents 2 weeks, so the time frame is almost 4 years. You have an uptrend, significant downtrend, significant uptrend, 3 different moves, really no sideways consolidations within it. And just little bits for the reversal of trends. But if you were stating to me you're in this uptrend, okay, I want to go short. Do I go short now here? No. What I need to see happen is I need to see it pull back to the band so the band can flatten out. Check mark. Then what I need to see you do is to establish a level of support. Not much lower than where it was before, and it had a fast move up to this point in here. So I really don't count that as established support, but it is still a little bit of support. And I'd be saying, at this point, okay, either the failed move is going to be this or this. Well, it turns out it was that, but you could never tell when you were here. But going back to the point, I want to short. What needs to happen? Well, you need to establish support and then find resistance break support. How about now? Have we established some support? Well, yeah, because it came down to here, back up within the band, and now we have support. So now once we break this level, we're pretty much going to go short or bet lower. And right here it did. It also did a second time in here. But the main one would have been right in here because you had resisted this area after you established resistance, and it would have been a winning play, easy. So now it's going lower, and every single time it comes to the band, resistance, resistance, boom. Because now I want to go long. Going to the band doesn't mean it's looking good. Because it needs to flatten out. Then it might look good. See, at this point it wasn't looking good, but here's where it flattened out. So it had much better progression within it. So I want to go long in here. Well, I need to see it flatten out. Okay, there it's flattened. I'll give you that. Now I need you to go up, establish resistance, come back to the band. Well, it's gone up, and it hasn't even established much. I don't even know. Maybe this is resistance. And we're going to talk about this big move very soon. But it's a huge move, and it's not normal. Let's get back to this level now, because that could be it. The move could go up to 300 before it even sees this band right now. The 18 average of highs is 137. The price is almost 200. That's a 60 plus move within it. That's 30%. That's a huge distance away from it. This upper band is in at 185, and well, the price action is over $12 higher, and that's 7% higher, 8%. That's decently large. Now, as far as Fibonacci retracement is concerned, this point A to point B should come up to this level. When it comes there, I expect one of three things to occur. The favorite is for resistance of some degree at this level. Something like this, that's some degree. Maybe it just goes like this and it resists it for a while. There's another degree. Second one is support at this level. Comes up and then maybe does something like this. That's support at some degree. And the third one is a fast move to the next level, which happens to be here. Check mark. So now the same thing for the what I just said here. Resistance to some degree, support to some degree, or a fast move to the next level. So those are really the next three things that occur. Again, the favorite is resistance to some degree, but that doesn't necessarily mean that it will. Also, pointing out, volatility, 18.5%, average is 9.5%. Volatility is massive at this stage, which means that you can very easily have further large green and or red candles that will occur over the next 4, 7, 8, 9 or so periods. Another thing about Fibonacci as well is for indicator for failed moves as far as direction. So move from point A to point B. For it to be a failure, the second Fibonacci level has to be taken out with resistance established, a move usually back to that level, and then a break above, failed move. You expect a move up to this higher level and most likely a break of that, then moving to previous more longer term resistance or making new highs. Secondly, for distinguishing failed moves from a point A to point B, this running average works very well. Okay, so now it has started to flatten out. When you have a solid uptrend coming in within it, now it's looking as if that's a failed move, and same thing as before, you'd expect to move at least to the previous high, but even possibly taking it out. Now, as far as possible plays, I'm just talking about systems within here. I mean, when I talk about situations of when to make a play, it's got to be the timing's right. That's going to be the case with natural gas. But this one is a system that I'm going to be talking about. And that is, you have your move from point A to point B and you make it to the 50% mark. When I see this, and at this point, support cannot be found either. It has to go straight to the 50% mark without any support, which has been the case here. So what I look for when I see that is if it, say, goes to 175, I either want it to go back to 155 here, and I would wager, bet, / gamble for it to go higher with a projected target or a sell order in at the 201.5 level. If it doesn't go down here, then it's got to go here first, which it obviously has, where you would wager, bet, / gamble for it to go lower, 201.53, which means you'd already be in. You're pretty much there now as it is, as the gain you would have is about 3.5 or so. That's about 1.5%, not much. And your target in here. Of course, if you play the stops, if you're going long, your stop would be somewhere here. If you would have, or short, I should say. And if it would have came back, you probably would have put it somewhere down there. It's part of the game. And that is the main thing for this, but it's well above this upper band. It's not a surprise if it continues to go further, but to me, it's both bullish and bearish for it to have a retracement back down towards this level. And even if you do a play or something like this, let's say you got in and it comes down to here. Well, you haven't hit your target yet, so why would you want to sell? However, that also means you'd be dumb to get stopped out here, because if it goes down to here, maybe you adjust your stops here or here or here, somewhere where you still get a profit. Or maybe you buy a small amount of call options or something, and in case it goes higher, you'll still got some profit. Okay, that'll be the coffee chart. Let's now move on to the cocoa chart, exact same time frame, which is the 2-week chart. And this is what I'm seeing with many different types of markets, but this is Technical Analysis 101 by the book. Point A to point B. Notice this running average starting to go higher, showing signs right now that this move might be failing, and where we are at this Fibonacci level, breaking above it, establishing resistance, coming back and breaking above it again, failed move, and you expect a move to this high, most likely taking it out as well. Now in the situation here, I wouldn't blindly be shorting at this level or going long. Maybe if anything, blindly shorting. But let's assume that you did get in on a short here, right when it hit that level 2 periods ago, basically over a month ago. Well, it's at 29.64. Right now you'd be down about 25, that's almost 1%, so you're pretty much down, not down at all, you're breaking even. Maybe you still want to get in and make the play now, it's up to you, but it's more probable here that it was going to be resistance as it is now. Because since that point, it has had 2 positive up weeks in a row. Within this trend, how it all started, sideways, establish resistance, come back. And even a little bit here again too. So you've barely broken this level. There's also room for further upside. So this would be one area I would not like the idea of wagering for it to go lower, simply because in here you liked it going long and it's barely went higher and you want to go short. Interesting. Very interesting to say the least. Final chart, natural gas. This one will be a daily chart though. Although I'm going to draw in 2 lines very messily. One here around 428. And one here at about 685. The largest highs that this thing has had is about 14 2/3 that occurred less than 1 decade ago. The lows within the last few years have been around 2. So therefore, this is a 38.2 level, this is a 61.8. I would consider the distance of this move to be a decent size pierce below it, and it's coming back down to significant Fibonacci, already a pierce above it, and this whole area is a pierce. Again, there is a play, it's either to go long or to go short as of now. And I'll explain why right now. And it's short. And right now. You're asking me to go short in here. The play is, if anything, long at this stage. Decent gain. You go from 530 to 630. Granted, didn't do so well since then. But I need to see this come to the band and flatten out. Well, that's just a huge reversal. So that's a situation like, okay. You established support. Now what I need to see happen, and we'll say back in here, I need to see it move up to the band, break support, then you go short. Only thing is, it didn't go up to the band. It went sideways. Markets correct either through time or through price. So it needed another additional week plus from this point in here to go sideways and reach the band in here. And I need for it to establish support and break below it. Well, it's already broken below it now. It established it. Thursday, it broke below it. And now it's lower. So that's the play, breaking support, which is exactly where it is now. So originally, you think, okay, I get in right here. Well, if you were late and you're looking at this now, well, you're at the exact same price as you were before. So what's the difference? But we're going to just play around with some numbers just a little bit more. Got some numbers on the top. The March 10 high, which is this high in here, 473. This low is 434. Therefore, 38.2% is 442, the exact price that it happens to be at now, where the 61.8% is 454. And if you take a look at this on a shorter term time frame, say on FinViz or any other site that you have where you can take a look at both the move from here, but mainly just the last couple of days, then what you would see is that this 442 level is showing signs on the more shorter terms, like the 5-minute chart of, okay, now is the time in which you want to wager for this to go lower. Where would your target be? Right here. And if you look at different strategies for doing this, your stop, if you had one, has to be a little bit above here. We're not talking 454, at least 455, 456, but even realistically about 458, 459. The 18 average of highs is 465, so we'll say there, right in here, 465. That means your risk, if you were to make a play like this, is 23. So your odds, given that you would sell at 411, which is 31 lower. Throwing out any type of commissions, rake, basically. If you're right with this wager 23 times and you're wrong 31 times, but based on these numbers, you're going to break even. So if you were to make a bet like this, a break-even player would have to be at least 44%. But if you want to be a winning player, you probably want to be at least 60, 65, 70, well, 60% confident that a play of this type of magnitude would work out. And I'm just going over this like a casino game, because really that's exactly playing what that is. It's just playing a casino game. It's one of the games similar to the game of poker where the house just has a commission rake basically, and you play the players. Of course, the only difference here is they play this game as well. However, throwing that aside, 3 days in the band, 2 days closing below, I do like the odds that it does make a move at least down towards this level. With that being said, we have a guaranteed failed move. And most likely the fast move is going to follow. Either here or here. And if this is the failed move, I would expect it to test even down towards here, even go lower. And if this is the failed move, oh, we're breaking this and wow, 10, I mean, that's highly volatile. So therefore, at least a move of this nature where you come up that fast and you're not able to find support, already you've seen this failed move look as if she's going to break down. So therefore, if you play this game, you're playing at your own risk. I just would like for you to understand your odds. And then when you understand them, well, geez, now it'll be a lot easy to be a winning player. Thank you for tuning in and have yourself a great week. Bye-bye.